Hi everyone, I'm Matt McLennan. I'm a commercial real estate broker with Kidder Mathews in Tacoma, Washington. I believe it's time to give the market an update on where things are at currently in the Puget Sound industrial market. But rather than touch on statistics and leasing activity and the normal metrics, I thought I would go ahead and give you some of my projections for the coming years, keyword years, here in the industrial market, and more specifically, our inventory. Now, if you look at the Puget Sound industrial market as a whole, depends on what submarket you boil it down to. We're somewhere between 3 to 5% vacant, and really in the core, we're closer to 3% vacant. That is incredibly low. That means that 97% of our building space is occupied by existing owners and tenants. So, what does this mean for demand and supply? I mean, at the end of the day, demand still remains really high and supply is low. That high demand is keeping supply low. Now, we historically have been a market that has been producing new product coming out of the ground via ground up development. And that pipeline has been very healthy for the past several years, especially during this most recent cycle. On average, we've been delivering anywhere from, call it, 5 to 10 million square feet roughly on an annual basis. And that new square footage has historically been absorbed, whether it's immediately or shortly after delivery, it's typically getting absorbed. Now, fast forward to today, where we're sitting, getting close to about halfway through 2023, and product is still being delivered because our entitlement timeline here in the Seattle market, if you bought a piece of land and entitled it and then did ground up development, there's a good chance that you're not delivering that product until, call it, 2 to 3 years out from the time you purchase that land. So there's a long lag time from finding your property to delivering the product that can then be occupied by tenants. So when you take that into account and you sit at where we're at in 2023 today, we're probably delivering buildings that were the land was purchased back in 2020 or even possibly before that. So where am I going with this? Well, back in 2022, when interest rates started to rise, we saw a huge drop off in the value of land as it related to what developers could pay for land. So I'm not saying the land became less valuable, just what developers could pay, because developers have construction financing to consider, construction costs, which are still very high. But really, when interest rates started to rise, cost of capital went up, and consequently, also exit cap rates and everything associated with a development project. Costs got higher. Okay, let's just boil it down that simple. And when costs are higher, you can't pay as much for the land up front. Okay, so what did that end up resulting in? Well, landowners didn't want to sell their land for less than yesterday's values, and there hasn't been enough change in time in the marketplace for landowners to get adjusted to these new values. So look back to, call it, mid 2022 to today, about a year of this rising interest rate environment that we've been living in. And I can tell you confidently, there are very few new development projects, and more notably, development land that has been acquired by developers and is being entitled currently. So given that 2 to 3 year horizon for developing a project, like I mentioned before, we have residual pipeline activity that's going to continue to deliver product in 2023, 2024, and we'll probably have some product that'll be coming out of the ground still in 2025. But when you get really into 2025 and especially beyond there, it starts to get really murky on what the new pipeline of industrial warehouse product that's going to be delivered is going to look like. And my opinion is, based on everything's going today, is we're going to have an undersupply of new product coming to the market. Meanwhile, assuming demand holds, which there's no real reason to believe that it won't. Obviously, economic environments and changes that are going on the macro level could have some impact there. But assuming our demand holds, which I believe it will, we're going to have a shortage of product. What's going to happen? The existing supply, that 3%, 3 to 5% that I mentioned earlier, is going to start getting absorbed. Our vacancy is going to plummet. And then it boils down to the most fundamental economic principle of supply and demand. If there's less supply but demand holds, pricing is going to go up. And our market has seen just a massive increase in rental rates and pricing as of late, and call it over the past 5 to 10 years anyway. So to think that several years from now we're going to be in a supply constrained market, I could see us being 1% vacant or less, very similar to Los Angeles and in the Southern California market, where they have, by the way, two very important ports, just like we do here in the Seattle area. And they have seen their rental rates absolutely skyrocket. And I think the exact same thing is going to happen here. So What can you do with this information? One, plan ahead. If you're a occupier of space, whether you're a tenant or an owner, think what your next 3 to 5, but really 10-year horizon is going to be, because things are most likely going to get tougher before they get easier. And especially so if you have a space decision to make in the next 3 to 5 years based on when your current lease expires today or your projection of your business growth or retraction, for example, then really getting ahead of that decision right now, knowing that there could be very well a shortage of product in the coming years. Can't stress enough how important that is. Now, this is just my personal opinion. I didn't come up with this idea or concept. I don't think I'm alone in looking at it this way or believing that this could very well happen, but it really feels like it's going to become a reality. And consequently, the market's just going to be tighter than it's ever been. Pricing's going to rise, building values are going to rise, land value is probably going to rise, and it's going to be really interesting to watch play out. So anyway, curious what your thoughts are on my hot take there. Would love to hear your opinions in the comments. As always, thank you so much for listening. I really appreciate it and look forward to catching up with you all soon. Take care.